China's trade surplus has just shattered records, hitting a staggering $992 billion in 2024. But this milestone isn't just a sign of economic strength, it's a flashing warning light for global trade tensions. Today, we unpack how China's export boom is colliding with political risks, tariff threats, and a fragile domestic economy. In December 2024 alone, China's exports surged 10.7%, far outpacing the 7.3% analysts predicted. Meanwhile, imports grew a meager 1%, reflecting weak domestic demand. The result? A monthly trade surplus of $104.8 billion, the highest ever recorded. Front-loading fear. Exporters rushed shipments ahead of Donald Trump's anticipated 60% tariffs on Chinese goods, set to take effect after his January 20th inauguration. Global demand, strong orders for electronics and green tech from Southeast Asia and Europe offset China's sluggish domestic consumption. Currency strategy, a weaker yuan allowed to drop below a long-defended level, made exports cheaper globally. But this surplus isn't sustainable. Here's why. The incoming U.S. administration threatens 60% tariffs on all Chinese goods, which could cripple exports by late 2025. Economists warn of a severe downturn if implemented. Beijing has vowed to retaliate, escalating a trade war that could shrink global GDP. The European Union is preparing emergency measures to block a flood of discounted Chinese products, fearing an economic nightmare. A new export control mechanism with China aims to ease tensions but may limit market access. Falling export prices and reliance on foreign markets expose China's inability to boost homegrown demand. The fallout isn't confined to China. Nations like Vietnam are caught in the crossfire, forced to choose between the United States and China. Meanwhile, the WTO's outdated rules struggle to mediate, risking a collapse of the global trading system. Supply chain shifts. Companies adopting China Plus One strategies face disruption as tariffs reshape manufacturing hubs. Currency wars. A weaker yuan could trigger competitive devaluations, destabilizing emerging markets. Consumer costs. United States and EU households may face higher prices for electronics and green tech. Will China's surplus persist? Experts say yes, but at a cost. The yuan's depreciation and front-loaded exports offer short-term relief, but Trump's tariffs and EU barriers could reverse gains by mid-2025. For Beijing, the real challenge lies in rebalancing its economy away from exports, a task easier said than done. The globe will just end up poorer, warns one analyst. The question is, how much collateral damage will the world accept? Subscribe for more analysis sources: Financial Times, Capital Brief, Trade Finance Global.